Hello friends, this is Raj Sastry from Raj Option Trading. Today is July 30th, 2021. I will cover top fintech stocks. So as you can see here, I got a list of fintech stocks that are doing very well. At the top of the list, we got FUTU Holdings. It's a Hong Kong based company into trading. And I think it's doing very nicely, 253%. And then we got TIGR or a Up Fintech, $16. Nice growth here, 221% here. And Capital One, this company had done nicely last year, 158%, and so on and so forth. We will look at these companies in a little more detail and see if it's worth investing at this time. And typically, many of you know this very well. Typically, when the interest rates are down, the financial stocks do very badly, but these fintechs will do very nicely because interest rates are low. It's helping these companies to really grow nicely. So with that, it's always a sector rotation type theme. Interest rates are low, bank stocks will do bad, but these fintech stocks will do very nicely. So with that, let's jump in here and look at these stocks in a little more detail. And before that, let's look at the top news in these fintech stocks and take it from there. From a top news perspective, we got here FUTU Holdings, ticker symbol FUTU. It did whopping 335% share gain. I feel like even up here, FUTU is a very good stock. They came down very hard of late with all the China and the Asia Pac stocks being down. But even up here, I think you should carefully and slowly buy FUTU Holdings and take it from there. We got here five best Chinese stocks to buy and watch. So we got Weibo, Sohu, Neo, Bide, and Li Auto. I think we should look at many of these and buy them slowly, and and accumulate a nice position here. Then we got here five reasons to be bullish on Capital One. Capital One is doing very nicely off late. I think it's good to buy Capital One on any pullback. We got Discover Financial here. This is also doing nicely. I think we should look at this company also and buy these companies when the time is right. And we have Next Amazon. Everybody wants to buy nextamazon.com or a Next PayPal. We got three stocks according to Motley Fool here. What is SE? We got MELI, it's a great company, and then we got Ozone, which is a Russia-based company here. Then we got Shift4 Payments. I think this company is doing very nicely. Last year this company was left for dead. Came back very nicely. I think even up here it's good to buy this company on any temporary pullback. And we got two tech stocks to buy during economic boom. We got Bill.com here and Intuit. I think both of these companies are great companies. I would buy them slowly and accumulate a nice position. Bill.com has done tremendously well, and Intuit has shown over and over again this company can really do very well over the long haul. And then we got here Blackstone, very steady Eddie stock. I love this company. They also pay good dividend. I think this company is doing great. We should buy this company on any pullback. And we got here three perfect stocks to spice up your portfolio. We got Synchrony Financials, great banking company, Eastman, and KGC, which is into gold. I think all these companies are great companies to buy on any pullbacks. And then we got Square here. We have bigger companies like MasterCard, Visa, American Express, but companies like Square, they're doing great. Jack Dorsey is a great leader. He knows how to compete effectively, and looks like their cash app is a money maker here. And next we'll jump in and look at few more news items here. And we got Mitek Systems, ticker symbol MITK. Looks like earnings and revenues top estimates. That's a good story. We should look at this stock and see if it's worth buying, probably on a temporary pullback. Then we got 12 best stocks under 50 to consider. One of the fintech in this 12 best stocks is Jumia. Jumia is a German-based company. They kind of do business in South Africa region. I think they will do very well. Stock has been depressed off late. Probably good to buy at this time. Then we got Goldman Sachs BDC. Earnings are expected to grow. I think probably we should look at even Goldman Sachs up here. Travel theme has legs. This is where, as travel opens up, all these large corporations will depend on American Express to arrange those travels. I think we should look at AXP stock, which is American Express, up here. And then we got one of my favorite stocks here, Tradeweb. This company is doing great. Looks like they are meeting the Q2 estimates. We should buy this company on any pullback. It's a great stock. And we have MSCI, one of my favorite companies. I think this company is doing great. They also beat the revenue estimates. This one is a good one to buy on any pullback. And we got here 3 days to left to buy Paychex. I think 3 days already passed here. It's as of July 26th. This company is a very steady Eddie company. They're into small and medium business, Paychex processor, and they're also expanding into fintech and human resources. I think this one is a good one. And I also like ADP, another steady Eddie company. They also do very well. And then we got PayPal here. Looks like PayPal faces some SEC probe here. I would buy PayPal on this temporary pullback slowly and hold it for a long time. Now we got ADP here, automatic data processing. It's again a great stock. You can buy this stock and don't worry too much. This company is a very steady Eddie stock. You can sleep peacefully at night. Then we got two supercharged growth stocks here. We got MELI and Pinterest. I think both stocks are great. I love Mercado Libre. It's done very nice over the long haul, ups and downs, but overall very nice growth. And same story with Pinterest. And then you got Shopify here. Shopify, I think, came down a little bit after the earnings. We should probably look at this stock into this weakness and buy slowly. And then we got here PAGS here. It's a great company. I love this company. They're also a fintech play. I think they're back in Brazil, 97% gain. I would buy this company on any pullback. It's got great prospectus ahead. So with that, now let's jump into a stock chart here. A table with a little more details about these stocks and more. So here we got a list of fintech stocks here, starting from top. FUTU Holdings, $104 company or a stock price. Market cap is $15 billion. I love the great sales, 516 million, trailing 12 months, and nice sales growth. Great sales growth here. Right now, gross margin is 0, which is understandable. Many of these fintech stocks, you will see at times gross margin is low, but there's a nice net margin. And debt to equity is a little high, tells you they have a little more on their balance sheet when it comes to debt, but they know how to manage it very well. Nice ROE tells you it's profitable company. RSI 35 tells you even up here you can buy FUTU Holdings slowly. And as you see here, institutions are warming up to it. They're buying this company, and short ratio is 5%, meaning any good news the stock can go up. Short ratio is not more than 10% as we like it, but still it's 5% good enough. From a valuation perspective, it's not very cheap, but not too expensive. Also, it's 27, which is manageable. Stock has been dropping with all these Asia Pac, Chinese, stock problems. With that, this stock also has, lost its value. As you can see here, 5.4, 22%, all the way to 3 months. That's why up here, I would buy this company slowly. No need to back up the truck and buy a lot, but buy slowly, accumulate nice position. I'm sure this company will do great. And over 1 year, it's done very nicely. As you can see here, 253%. That's a great performance. Down 49% from 52-week high. Then we got TIGR UP Finte again $16 company, has done tremendously well, as you can see here from a sales growth perspective, a nice net margin as well as gross margin, and they've done nicely in 1 year, and RSI is 40, tells you it's oversold. Even up here you can buy. One thing I would caution you up here, all these Chinese stocks like Up Fintech, and there are a lot of good Chinese stocks. They all got battered with this, Chinese devaluation or a stock reset. I would buy, some of these Chinese stocks, slowly, and build a nice position. Will all of them be winners? Probably not. Some of the winners will be outsized gain. I think that's where you can make money. Follow a basket approach, and look at the winners and keep adding to winner positions. So with that, we got COF here, Capital One. I love this company, and it's good to buy this company on any pullback. As you can see here, growth is not great. As you see here, 1% in 3% in 5 years, 1% in 1 year. This company will give you opportunities. It's got ups and downs. I love to buy this company on any temporary earnings miss and hold for a while. Up here right now, RSI is 54, tells you to be a little bit cautious, mainly because they are just 2% shy of 52-week high. You'll get a better opportunity to buy this company. And then you got Discover here, again a great stock. So I will not belabor this whole chart here. You can look through. I've highlighted a few companies here like SE. Right now RSI is 49, good to buy. Nice sales growth, as you can see here, and also good gross margin, as you see here. Shift4, another company, FinTech, same story here. 45 RSI tells you even up here you can buy this company. It's been down since 1 week, 2 week, 1 month, and so on and so forth. Similarly, I got Jumia, Synchrony, Upstart, AXP, QFIN, JPMorgan, and AIG. Even the other stocks which I have not highlighted like Square, Mitek, Goldman, I love all those companies. I would buy them on pullbacks. Only reason I did not highlight right now is their RSI is a little higher right now. I would buy these companies on a temporary pullback versus jumping in when they are all-time high or near all-time high. So with that, let's go to next slide here. We got more here like Shopify, great company. I love this company, and looks like right now their RSI is 56. Tells you can cautiously buy. They're down 4% in 1 week and 0.9% yesterday. And I love PAGS and IIVI. Both of these companies got low RSI at this time. Nice sales growth. I love the sales growth here, and also gross margin handily beats rule of 40. As you add up quarter over quarter growth and gross margin, it handily beats number 40. That's a good indicator. I would buy both these companies, especially IIVI. Right now, stock has been selling off. You could buy slowly, given RSI is 44, which is oversold. Then you got Euronet. I know I've been looking at this stock for a long time. I would buy this company also. Right now, RSI is 50, mid-range. Stock has been doing nicely. I would wait for a small pullback and buy slowly. It's 15% down from 52-week high. Then we got SIBO. It's one of the great companies into fintech and trading. They got a lot of these option on indices like S&P 500 and QQQ, Nasdaq 100. I think this company will do great. Off late, this stock has been stuck in the trading range for a while. I would slowly accumulate and hold a nice position. RSI 50 tells you it's a mid-range. And similarly, like SIBO, I love stocks like Nasdaq, which is also great, and even CME for that matter. Then we got here StoneCo, great company. RSI is 38, which means it's oversold. I would buy it slowly and hold a nice position. Then we got Workday, MasterCard, FICO, which is Fair Isaac. All of them have got a little bit lower RSI. And as you see here, Workday has been selling off of late. I would buy slowly. A lot of the Fortune 500 companies, they have Workday for human resource management. This company will do nicely. And then you got your global payment, again RSI is 50 mid-range, you could buy up at here. And then you got Western Union, again RSI is low, you could buy some. Even the other companies here, they're all great companies. Look at the sales growth here, look for double-digit sales growth and also double-digit gross margin, and buy slowly into any weakness. These companies will do great. Next, we got here last page here. You might see some of your favorite companies here. These are all stocks with the negative 1 year growth here. Many of you, I know you love stocks like SoFi, Paysafe, even Coinbase, Affirm. Unfortunately, these stocks did not fare very well when it comes to 1 year performance. Look for the winners with the nice sales growth. As an example, we got many of these companies I love, Market Access, MKTX also. Unfortunately, off late, 1 year growth is negative or 1 year performance is negative. But I would look at these companies and add to the position slowly and take it from there. Now we will jump into few companies in a little more detail and look at their stock chart and see if it's worth buying up here. First, we have FUTU Holdings. As we are talking about, stock has done great, especially in 2021. Earlier on, stock has done tremendously well. Look at this hyperbolic growth here. Done nicely, came back to earth, again back to earth, and then went up. Now it's back to earth. As you can see here, looks like there is a nice support level up here around 103, 104. I would buy slowly at these levels and hold for a while. This company will do very well as these Chinese and Asia Pac issues sort themselves out. Then we got Uptech, same story here. Nice looking chart. I love this chart. It goes up, done very nicely early 2021, just like FUTU Holdings. It's also into stock trading and security trading business, but came down up. It's a basically you can make good money in stocks like this if you're patient and wait for a pullback to buy. And here also same story, there's a nice support level somewhere up here around $15 or so. You could buy slowly and hold a nice position. This will also bounce back nicely. Then we got steady eddy type charts here with the Capital One, as you can see here. This is a great looking chart. This stock also gives some temporary pullbacks, as you can see here. Many times I've seen this company selling off during the quarterly earnings. I would buy this company on any temporary pullback. Right now, these guys are in a trading range, tight trading range, as you can see here. As you look through the numbers here, Capital One, $163. They're just 2% shy of 52-week high. I would wait for a small pullback here before I put money to work. Then you got DFS, same story, nice looking chart here. This company also gives you opportunity many times to buy during the pullbacks. As you look at this Discover here, they are just 2% shy of 52-week high. I would wait for a little pullback here and buy the stock also. Then we have SE. It's a great company. I think it's based in Singapore. And as you see here, this stock goes up and down very nicely. All this downturn here is a good buying opportunity. As you scan through here, if you draw a line something around like this, I think 240, 250 range is a good support level for this stock. I would buy this stock on any pullback and hold a nice position. As you see here, SE is just 5% below 52-week high and RSI is 49. That tells you can slowly start accumulating this company, and this will do well. Then we got Shift4 here, FOUR. Nice looking chart here. They also give you opportunity to buy. There are a lot of these stock drops here. Even up here, as you can see here, Shift4 RSI is 45. Stock is oversold at this time, 13% off from 52-week high. Out by RSI, sorry, FOUR, Shift4 into this weakness on any down days and take it from there. Next, we got a couple more. One of my favorite is Bill.com. Company was IPO'd last year or 2 years ago. As you can see here, a lot of opportunities, lot of pullbacks here. One, two, nicely went up. Again, pullback, went up. Now it's wondering where to go. As you look at Bill.com, just 3% shy of 52-week high, RSI 70. That tells me, hey, don't touch at up here. Especially stock RSI is at 70. Wait for a small pullback. It will always give you pullback like it did back in February and also March April time frame. Buy on the pullback. This company will do very well. This company is really trying to eliminate all the back office accounting issues companies have and automate those non-fancy back office work. Then we got BX here, Blackstone, very steady as a stock. As you can see here, you can't go wrong on this company on the long term. You should buy this company on any temporary pullback. Right now, Blackstone is 1% higher than 52-week high. I would buy this company on a little bit pullback here and own it for a long time. Company will do great. Also pays a nice dividend. Then you got Synchrony Financials. This company is doing great. They got partnerships with companies like Amazon.com as an example. This is becoming a darling bank when it comes to all these e-tailers and online shopping. I love this company. Nice looking chart. As you see here, Synchrony Financials RSI is 49. Tells you even up here you could buy this company stock and hold it for a long time. All right, so let's look at a few more here. We got Square. Square is one of my favorite companies, Jack Dorsey's company. As you see here, look at the chart slowly. You'll see stock sells off, goes up, sells off, goes up. Nice higher highs and higher lows. I love this stock pattern here. Sells off hard, comes back, sells off hard, comes back. So this is a great company. On any pullback you can buy. You have Jack Dorsey as the leader. He will always do very nicely. As you look at Square here, $255, RSI 61 tells you, hey, you can buy some up here, but wait for a pullback. You'll get the pullback and take it from there. Stock is down 10% from 52-week high. Then we got MITK. Again, as you see here, stock shot up nicely back in December, January timeframe earlier this year, sold off. Now it's higher. As you look through MITK here, RSI is 56. I would wait for a little pullback and buy the trigger. Stock is down 5% from 52-week high and nice sales growth. I love the sales growth and also nice gross margin and net margin. Now we look at a few more here. Goldman Sachs, rocket ship of late. Nice partnership with Apple, as you know, for the Apple Card. As you see here, Goldman Sachs, right now RSI is 53. Tells you can cautiously buy the stock at these levels. Earnings is out of the picture at this time. You can be safe to buy some. Nice sales growth. They've been doing nicely and nice net margin. Next we got AXP American Express. It's a great company. Stock will do very nicely over the long haul, especially as the travel is back. More and more corporations are leveraging American Express for their services, travel services. As you see here, RSI is 52. They have a okay sales growth quarter over quarter, 35%, 35%. So I would buy this company on a pullback. Right now RSI is 52. Tells you can cautiously buy at this time, but wait for a little pullback. Then you got Intuit. It's a rocket ship, nice looking stock, very steady eddy. I would buy this company also on any pullback. As you see in the chart, this company always gives you pullbacks, so you could buy on the pullbacks and keep adding. We have QFIN here. QFIN is a China-based financial tech company. Stock has been sold off pretty hard here. As you scan through here, there's a good support level around $20. I would buy this company slowly into this weakness and keep adding the position. As Chinese regulators look at these companies, I think they will start certifying some of these companies. I think these guys also had some accounting issues while ago. That's why stock came down pretty hard. I think it's okay to add slowly and take it from there. Then you got MSCI, a great company, nice looking chart, steady Eddie company. Right now, as you see here, RSI is 80. I would not buy at this time. I would wait for a little pullback. This company also, we are looking at MSCI. MSCI RSI is 80. So I would wait for a small pullback for this company. It's been doing great, as you can see here, and take it from there. With that, let's jump into next page here. We got Paychex, PAYX, great company. Companies like stocks like Paychex and even ADP, you could buy them on any little downturn and hold it for a long time. These are the sleep at home type stocks. You can sleep peacefully, no need to worry too much. They will do nicely. And stocks like ADP and even Paychex, they pay a good amount of dividend. That's also a good one. And both these companies, Paychex RSI 66 and ADP RSI 62, that tells you, hey, be cautious. Stock is high right now. Wait for a little pullback and then buy. And I love banks at this time. JPMorgan as example. As you scan through here, chart is nice looking chart here. Right now they're in a tight trading range, as you see here. And JPMorgan RSI is 46, tells you it's the good time to start accumulating JPMorgan. As Feds increase the interest rate, this stock will do nicely. And Jamie Dimon, the CEO, is a great guy. I think he will steer the company nicely. Then we got PayPal. I think they're into some security probe, as we talked about. Stock has been dropping, as you can see here. RSI right now is 60. I would buy slowly into this pullback here and accumulate a nice position. We have Mercado Libre here, MELI. Nice looking chart. As you look through a little bit shorter term, you will see turbulence up and down, down and up. I would buy this company on this any pullbacks. If you look at a longer term chart of Mercado Libre, you will see a nice uptrend, even though there are very good opportunities to buy in the shorter term chart like this. I would buy this company here right now, 19% down from 52-week high, RSI 67. On any pullback, I would buy this company. Right now, stock has been trading nicely since past 1 week, 2 week, all the way to 3 months, but down for 6 months. Given RSI 67, I would wait for a little pullback like we saw here, here, and even here, and then put the money to work. Thomson Reuters, it's again a great company here. As you see, a stock is nice, steady Eddie chart here. They also give some small pullbacks once in a while. Right now, RSI 67, and they're 1% above 52-week high. I would wait for a little pullback to buy Thomson Reuters, and it's a great company. Stock will do nicely. Looks like some of these companies are not fintech. We'll skip this and go to next chart. So with that, thank you very much. Happy investing and trading. Please subscribe.